Hey everybody, welcome to Matador Research. I'm going to share my thesis on Aeris Resources with you. Aeris Resources is a copper and gold mining penny stock that is currently flying under the radar with huge upside. It has recently caught the attention of an US investment manager with billions of assets under management. This penny stock is on track to become the next OZ Mineral or even the next FMG. Aeris Resources is currently trading at 10 cents with a market cap of $192 million at the time of this video. 4 main reasons why AIS will break out soon. Reason number 1, undervalued fundamental. Reason number 2 will be its recent buy-in from institutions and smart money and its directors. Reason number 3 will be its top-tier management team. Reasons number 4 will be the 2021 resources and copper bull run. Now let's look at its fundamental. This report I am looking at right now is from Morningstar and is dated on the 12th of March when the share price is trading at 11 cents a share with a market cap of $199 million. On the 12th of March, Aeris Resources is trading on a price sales ratio of 0.39 and a price earnings ratio of 0.44. Historically, AIS has been underperforming under a different management with an over-leveraged balance sheet and underperforming assets. Since then, the company has successfully restructured, deleveraged itself and strengthened its balance sheet. Aeris Resources is on the right track for growth right now, judging from its latest outstanding half-year financial results, acquisition and strategy. It is a matter of time Aeris Resources valuation will be closer to its copper and gold mining peer, OZ Minerals. As you can see here, in 2018, OZ Minerals was trading on a PE ratio of 9.45, which is a huge difference from its current PE ratio of 34.88. That translates to a valuation growth of more than 300% in a span of 2 years. Before I start my discussion, I would like to talk about Aeris Resources half-year financial report. In Aeris half-year financial report published on the 23rd of February for the period ending December 2020, it reported a revenue of $214.5 million with a revenue growth of 99% compared to the previous corresponding 6 months period ended 30 December 2019. That means the company has made the prior year annual revenue in a span of just 6 months. This makes me very bullish about the company and also looking forward to their 2021 annual financial report. Now let's talk about its cash position. According to AIS half-year financial report, it is currently sitting on a cash position of $45.4 million. One thing most mining penny stocks investors are worried about is cap raise, which will put a downward pressure on the share price due to more shares being on issue. AIS cash flow from operating activities is up by more than 1000% and it seems to be in a very strong position to support its operation, and a cap raise is highly unlikely. Aeris Resources have lots of resemblance to Northern Star Resources and Evolution Mining. Back then, those are the small and mid-cap miners who are low on debt and high on cash during the resource price decline in 2015, and they are able to go on a shopping spree for cheap mines to expand their revenue and grow the company. With the increase in the interest rate, over-leveraged miners will be those ones selling their mines for cheap when the bus comes to pay down their debt and divest. Barrick Gold sold their cobalt mine in 2015 in an effort to pay down their debt and meet their debt reduction target. A mining company with an under-leveraged balance sheet and good cash flow could snap up many mines of those over-leveraged mining companies. We are now undergoing a stock rotation mainly because of the rising yields and rising interest rate. Investors are currently looking to invest in stocks with good fundamentals instead of highly leveraged companies that are pre-revenue or have a high PE ratio. The recent investment trend also shows that there is a huge divergence between the Nasdaq and the Dow Jones Index at a level not seen since 1993. There are 3 pure-play copper firms in the ASX, which is Aeris Resources, Sandfire Resources, and OZ Minerals. Looking at the fundamental of those 3 companies, Aeris Resources has the lowest valuation. OZ Mineral is one of the closest stock to Aeris Resources in terms of structure and composition. The main difference is that OZ Mineral is a mid-cap trading at a 5.6 price-sales ratio, while Aeris Resources is a small cap trading on a 0.39 price-sales ratio. OZ Mineral was also once in Aeris Resources' shoes. As we can see from this Morningstar financial report, OZ Mineral is currently valued at a 5.6 price-sales ratio and a 35.35 price-to-earnings ratio, while in 2015 its price-sales ratio is 1.41 and its PE ratio is 11.41. which is a nearly 400% growth for its price-sales ratio and a more than 300% growth for its PE ratio. Aeris Resources has positioned itself as a low-debt company with a low price-sales ratio, a low price-to-earning ratio, and a low price-to-cash flow ratio. Aeris Resources is currently being overlooked by the market due to its turbulent financial history, and it has gone through 3 phases of restructuring since 2013. And currently we are in phase 3. Since 2013, Aeris Resources management has deleveraged its balance sheet, reduced its debt from $136 million in the 2013 financial year to $10.9 million in its latest half-year report. This shows that it is just a matter of time that AIS assure its current and prospective shareholders that it has turned around and on track to become a mid-tier mining company as envisioned by its current board, and it is on the right track to growth, especially seeing its half-year financial results and its remarkable year-on-year growth. It is just a matter of time where the valuation gap between Aeris Resources and OZ Mineral to become closer. Now we will talk about the trend in the copper market. The price of copper is increasing due to strengthening demand from clean energy, industrial users, and a tightening supply squeeze. Copper discoveries have been on a steep decline in recent years. Let me put this into perspective. In 1997, the world saw 17 major discoveries, and in 1995, 2005, and 2007, there are 15 discoveries across the world. Last year, there were 2, and none at all in 2017, 2018, and 2019. We are currently entering the next resources supercycle according to JP Morgan and various other analysts. Copper prices has hit a 9.5-year high recently, and its price has doubled since March 2020. Mining analysts expect Chinese stimulus to support copper demand in 2021 together with an expected global economic recovery. Goldman Sachs has raised its 12-month copper prices target to $10,500 per ton. To put that into perspective, the copper all-time high prices is $10,190 per ton in 2011. Goldman Sachs also warned that we are confronted by the largest copper deficit in a decade. With a poor recent record in major new copper discoveries, Aeris Resources exploratory activities results will certainly be a major news if large amount of coppers are discovered. At the time of this video, Aeris Resources is currently trading at 10 cents per share. In financial year 2021, Triton is forecasted to produce more than 23,000 tons of copper, and Krakow is forecasted to produce 70,000 ounces of gold. According to Aeris Resources' half-year financial report for the year ending 31 December 2020, it has achieved more than half of its annual production target during the period. It seems to be on track to meet its annual production target set by the management. Aeris Resources' 2021 financial year revenue is expected to be more than $400 million according to the company production guidance at the current spot price. In the most bullish case for Aeris Resources, where it is valued at a 5-to-1 revenue ratio, which is the same revenue ratio as OZ Mineral, it will give the company a market cap of $2 billion, which will translate to a share price growth of more than 1,000% from its current share price of 10 cents with a $192 million market cap. Aeris Resources' restructuring success has made its way through the investor community, and it has recently caught the attention of Paradis Investment Management. Paradis is an US investment manager with billions of assets under management. Since Aeris Resources announced their half-year financial results on the 23rd of February, Paradis has been increasing their position lately. A recent notice of change in substantial holding shows that they have purchased $4.6 million worth of shares from 24th of February to March 5th. Institutional investors' interest is a huge leap towards my review of this company. This result will serve as a catalyst on institutional investors' interest in Aeris Resources, and it is just a matter of time for its valuation gap to become closer to its peers such as OZ Mineral. I hope you have enjoyed this video. Please give me a like if you enjoyed this video.